Have you ever felt like your paycheck vanishes before you get a chance to enjoy it? Retirement can seem even more daunting, with financial experts often suggesting you need millions to live comfortably. But here's a reality check. You don't need a fortune to build financial security. By consistently investing $120 a week into a dividend-focused ETF, like the Schwab US Dividend Equity ETF, SCHD, you could solve paycheck struggles and create a retirement portfolio worth over $2 million. Even more exciting, this strategy could generate over $180,000 annually in dividend income, equivalent to a monthly income of over $15,000. Today, we'll explore how this works, explain the underlying principles of SCHD, and show how this simple, consistent approach can lead to financial independence. The SCHD, launched in 2011, is one of the most popular dividend-focused ETFs available. It focuses on U.S. companies with a strong history of paying and growing dividends, combining stability with long-term growth potential. SCHD tracks the Dow Jones U.S. Dividend 100 Index, which meticulously selects its holdings based on strict financial criteria. SCHD's unique strategy emphasizes quality over quantity. Instead of chasing high dividend yields, which can sometimes come with higher risks, the fund prioritizes financially stable companies with consistent dividend growth. This balance ensures that your investment remains resilient even during market downturns. How SCHD selects companies. SCHD employs a rigorous selection process to include only top-tier dividend-paying companies. To qualify, a company must meet three key criteria. 1. Consistent dividend payments. Companies must have paid dividends for at least 10 consecutive years, demonstrating a strong commitment to returning capital to shareholders. 2. Dividend growth. Beyond paying dividends, companies must show a history of increasing payouts. This indicates financial strength and a sustainable growth trajectory. 3. Financial health. Companies are assessed based on metrics like return on equity and free cash flow, ensuring that only financially robust businesses make the cut. This process results in a diversified portfolio of 100 high-quality U.S. companies across sectors like technology, healthcare, consumer staples, and financials. Top holdings include industry leaders such as the Home Depot, BlackRock, Cisco Systems, Lockheed Martin, Pfizer, and Texas Instruments. Why SCHD stands out. SCHD's focus on quality dividend stocks offers a balanced blend of stability and growth. Here's what sets it apart. 1. High dividend yield, currently around 3.41%, making it attractive for income-focused investors. 2. Impressive dividend growth. The 5-year dividend growth rate stands at the 12%, meaning your income grows significantly over time. 3. Low expense ratio. With an expense ratio of 0.06%, SCHD minimizes costs, boosting your returns. 4. Lower volatility. SCHD experiences smaller price swings compared to the broader market, making it a relatively stable investment. Additionally, SCHD recently underwent a 3-for-1 stock split, reducing its share price to around $28.33. This makes it more accessible to smaller investors without altering its overall value. Now, imagine turning just $120 a week into a $2 million portfolio. It might sound like a tall order, but it's possible with the power of compounding. Here's how it works. If you set aside $120 every week, you'll invest $6,240 a year. By consistently reinvesting your dividends and sticking to the plan, your money has the potential to grow significantly, especially when invested in something like SCHD, which has historically offered an average annual return of 8%. A pretty reasonable expectation. Here's how your investment could grow over time. After 5 years, you'd have about $41,136. By this point, you'd have invested a total of $31,200, meaning nearly $10,000 of your total is pure gains. In 10 years, Your portfolio might grow to $114,999. Your total investment would be $62,400, and you'd enjoy over $52,000 as in gains. Fast forward 20 years, and you're looking at around $558,000. You'd have invested the $124,800 in total, with over $433,000 in growth. But here's the real magic. Stick with it for 30 years, and your portfolio could balloon to a whopping the $2.6 million. With total contributions of $187,200, you'd have nearly the $2.4 million as in gains. This is the power of patience and compounding. By starting small and staying consistent, your money works harder and harder for you over time. By the time you retire after 30 years, your portfolio could generate the $180,000 or more annually in dividends, a monthly income of over $15,000. This passive income would rival or surpass most full-time salaries, giving you financial freedom. Dividends play a crucial role in accelerating your wealth-building journey. Here's why. 1. Steady income stream. Dividends provide a reliable income source even during market downturns. 2. Reinvestment power. Reinvesting dividends allows you to buy more shares, increasing your future dividend payouts. 3. Compounding effect. Over time, reinvested dividends grow exponentially, significantly boosting your portfolio value and income potential. For example, by the 30th year, your $187,200 total investment will generate $5,450 monthly in dividends, equaling the amount you've invested over the entire period. Since its inception in 2011, SCHD has consistently delivered strong returns. 1. Price return. Over 120% in the last decade, compared to the S&P 500's 200%. 2. Dividend yield. Around 3.41%, higher than the S&P 500's average yield. While its capital appreciation may trail the broader market, SCHD's focus on dividend growth makes it an ideal choice for income investors and those seeking steady wealth accumulation. Addressing risks. Like any investment, SCHD isn't without risks. However, its emphasis on financial stability and diversification reduces exposure to downturns. Key risk mitigating factors include 1. Low volatility. SCHD's beta is lower than the broader market, indicating smaller price fluctuations. 2. Balanced sector exposure. Diversification across industries cushions against sector-specific risks. With its low expense ratio and stringent selection criteria, SCHD is designed for long-term investors seeking steady growth and income.